Good evening, everyone, and welcome to the Money Show on ET Now. This is the only show of its kind where we get to answering all your personal finance queries and, of course, bring you market's top financial experts for the same. I'm Mubina Kapasi, and the topic that we are discussing today has everything to do with insurance, whether you're discussing investment funds, endowment funds, term plans, traditional insurance products, for any insurance policy or factors such as age, time period, number of dependents, and even coverage amount. Remember, all these are important factors to take into account while selecting any sort of insurance. And to discuss that, we have with us today Mr. Kapil Mehta, co-founder and CEO of SecureNow.in. Thank you so much, Kapil, for joining in. Good evening. And first up, insurance always is something that does tend to have quite a lot of conundrum among many of our viewers because of the number of kinds and, of course, the kind of products that have developed in insurance. I want to start off by first asking you that we have had a lot of modern insurance products that have developed over the last couple of years. Talk to us about that, and how they differ versus traditional insurance policies.
So thanks very much for inviting me here. There are probably about 300 to 400 different kinds of insurance policies in the market, and many of these have come up in the last 5 or 10 years. So you're absolutely right in what you say. I think the way to think about insurance is to protect the most important assets first, and that the most important thing is your life. So in my way of thinking, term life, which covers you for death, and health, which covers your health, are the two most important insurances to buy. After which you should think of other assets that you may own, like a home or a house. Investment is important, but in my view, that should be bought after these basic essential insurances are in place.
And of course, do remember, folks, you just have a couple of days left to file your tax policy, though I don't know, tax investments, pardon me, though I don't know, of course, with just 5 days, if it's enough time to essentially go for an tax-saving insurance plan. But nevertheless, do remember that there are lots of tax-saving insurance plans as well. Okay, well, do remember, folks, this is all about your viewer questions and queries. There's a number flashing on your screen, 6754-9498. That's the number you have to call in to ask Kapil about any of your questions and queries. Well, I think let's bring on board our very first question. It's coming in from Sheena. Now, Sheena says she's 45 years of age and wants to purchase a family floater insurance plan. She already does have a group health cover of approximately 10 lakh rupees and is looking to buy a plan that allows her to up her cover on a yearly basis. She wants some advice and suggestions on different plans. Kapil, what would you recommend?
Excellent question. I think the group health insurance scheme that you spoke about is typically offered by the company you work in to its employees. And I would not base an insurance plan on what the company offers. For so many different reasons. The group health plans are yearly renewable. That means every year it has to be renewed. The company may decide to change its policy of giving those insurances, or you may change to a different company. So in the example which you gave of Sheena, I think she should keep the group health plan aside and have a plan that she owns which covers her for health insurance. Now, when you think about this, if you're living in any of the cities today, you have to cater for serious ailments like a cardiac issue or like cancer, and treatment of any of these will cost you between 10 to 15 lakh of rupees. So the first thing which you should do is to buy an insurance which is at least in that area of sum assured, 10 to 15 lakhs. It should be an health insurance that you own. Fortunately, over the past 3-4 years, the regulator has standardized the kind of exclusions that can exist in this product. So most products meet a certain minimum standard. I think you could go to, you could talk to agents, you could go to company websites, you could talk at distributors, brokers, web aggregators to understand which of these insurances is good and buy it. The earlier one buys this insurance, the better it is, because by law, the individual health insurance product is renewable for life. So if you've bought that insurance today, then the insurance company is bound to renew it every year for as long as you want. So the earlier you get it, the better. And these benefits are not available in the group health insurance. So that's sort of, in summary, I think buy a 10 to 15 lakh sum assured standalone product that is your own and keep renewing it every year. You must absolutely do that.
Okay, that's the advice coming in from Kapil, and of course he does add that since these policies can be renewed at the choice of the investor or at the choice of the policy holder for lifetime by law, it's better that you get into these policies earlier. All right, next question is coming in from Jaywan Shah. Jaywan says 3 years ago he had taken a family insurance policy. Back then his father did not have any heart problems, but now he needs the money for an angioplasty. He wants to know if he can claim Mediclaim. It's a tough one really, Kapil, but I think as far as I know, while taking a policy, you do have to declare any known health problems. If back then he did not have heart problems, what can he do, Kapil? Is he allowed to claim his Mediclaim?
Yeah, I actually don't see this as a very difficult situation because exactly what you said, when he bought the policy, he did not have any disease, and the heart issue was the angioplasty, angiogram is something which has come up later. So he can absolutely make the claim. And in fact, what I would suggest is that you identify a hospital you want to go to, take your insurance policy to that hospital. Most hospitals have an insurance or a TPA desk, and if you show them the policy, they will coordinate with the insurer to get you all the approvals you need to actually get this insurance done. And when that happens, the insurance company will pay the hospital directly. It's a cashless claim. I would strongly suggest that you go in and have this settled on a cashless basis, which is that the insurance company pays the hospital and you don't make any payments, rather than what is called a reimbursement process, where the person pays and then files a claim with the insurance company to get the money back. But I think this is exactly why this health insurance will come in useful. I see no problem in actually making this claim at all.
Okay, textbook case, no worries. Making this claim, he should be getting it. Go to any hospital with the insurance policy. Kapil, I'm just going to put in a question over here and ask you about these investment cum insurance policies, ULIPs essentially. How would you look at those instruments? I mean, do they provide adequate cover as well as, of course, returns, because they are linked to the market in some way? How would you look at ULIPs versus a traditional insurance policy or a traditional mutual fund?
I think that's actually a very important question you ask. And when you look at the traditional policies or ULIPs, what is happening in those life insurances is that there are several aspects that are getting bundled together. So people will buy an insurance either because they want a return, or they want what we call forced savings, that you put in some money aside every year, or a sum assured in case there's a death. There are three different, very distinct needs. I am not an advocate of combining these three needs into one product, because I feel that when you do that, it's very difficult for people to realize what exactly they've got. So when you take a traditional life insurance, what is happening is that you're combining the thrift aspect with the investment and the death benefit. And most people will not realize that traditional insurances have returns that may vary between 4 to 6% per annum. That's less than what you would get in a fixed deposit. Now, if you understand that and you still decide to buy that product, that's fine. But in many cases, people don't really understand what they have bought. ULIPs are different. I think unit-linked products can be good investment vehicles. And the main reason for this is that several years ago, and I'm talking of 2010, the regulations, the regulator put conditions that limited the amount of charges that can be charged from a unit-linked product. Now, because of that, there can be good investments, but you have to understand which fund you're buying in, and you've got to be clear whether you want an equity or a debt or a balanced. You need to exercise that, because in a ULIP, the buyer bears the risk of market fluctuations. In a traditional life insurance, the risk is actually borne by the insurance company, because they will invest the money and they'll issue bonuses every year. So I think the way these two products operate is very different. If you have a risk appetite and you understand the markets, a ULIP is a good product. If you buy a traditional, just be aware of what you're buying. But left to myself, if the way I would think of this is that when you buy insurance, first make sure that the protection or the death aspect is covered. generally both the ULIPs and the traditional plans have a very low amount of death benefit. So you may think you've got something meaningful, but it may not be. So I would just first say that go buy a term plan, keep a sum assured that is about 10 times your annual income after you have that basic term plan in place, and that's a very cheap plan where if you survive the period you get nothing back, but if you die your family gets a huge benefit. Get the term plan, and after that if you still want to invest, then you can pick the ULIPs as and make a distinct choice about what kind of fund you want to go into, but do make sure your term plan is in place first.
Okay, so those are some words of advice coming in when it comes to ULIPs and what are the factors you should consider. All right, we have a live caller joining us right now, Sanjay from Mumbai. Hi Sanjay, good evening. Thanks for calling in. What's your question for Kapil?
Yeah, good evening. I just want to clarify. A friend of mine has got a Mediclaim insurance policy, and his secretary has wrongly mentioned his educational qualifications. Will that have any effect on his Mediclaim policy?
Okay, Kapil, over to you. How important is...
Sanjay, it will not have. Yeah.
Go ahead, Kapil.
Yeah, sorry, Sanjay. It will not have an impact on the policy because education is not one of the main drivers of issuing the health insurance policy. But what your friend should definitely do is to drop a mail and put this in writing to the insurance company's support email ID, which will be there on the website, and let them know that what the correct educational qualification is. And they'll sort of just acknowledge it. That's all you need to do is as just a matter of good practice. But I think your friend really needn't worry about this particular information.
Okay, all right. Just make sure you've got your medical details correct. I think that's more than enough. But yeah, of course, just write to the insurance company and get the details corrected. Thanks, Sanjay, for calling in. Well, we'll do one thing. We'll slip into a very short break. But yes, just like Sanjay, you too can get your questions and queries on insurance answered. The phone number is on your screens. This is The Money Show. Welcome back. You're watching The Money Show, where we are discussing everything to do with insurance. We have Vinci from Mumbai joining us live on the phone line with a question on the same. Hi Vinci, good evening. Thanks for calling in.
Good
What's your
evening.
query?
I am Vinci from Chembur, Mumbai.
Hi Vinci.
I want to know what is the best insurance company who will pay single premium pension plans.
Okay.
Insurance plans.
Straight to the point then. Kapil, what would you recommend him?
So Vinci, when you buy a single premium pension plan, I think there are two different kind of products that are available. One is a plan where you pay a single premium. It's called a deferred annuity. That means you pay a single premium, and then after a certain number of years, 10 years or 15 years, the annuity gets paid out. And then you have something called an immediate annuity, where you pay a premium and immediately the pensions start coming right away. So I think you have to be clear on which of these two plans you want to buy. There are several insurers who will give good plans. There's in terms of pension, you have LIC has good plans, HDFC has good plans, as does Max Life. So I think, and there are others. So you have a good bouquet of plans that you can buy from.
All right, Vinci, I hope Kapil has been able to answer your question. Next up, we have Prasanna, who's joining us from Bengaluru. Hi, Prasanna. What's your question?
Hi, good evening, Mr. Kapil. Good evening. My question is, if a person is having BP and sugar and he feels 58-year-old, is there any insurance available, Mediclaim available?
Okay, all right. I'm not sure if that qualifies under critical illnesses, because I do know that there are policies available specifically for that. We'll discuss that as well in just a bit. But for now, Kapil, let's specifically talk about Prasanna's question.
Prasanna, I think the question you asked is a question which is becoming increasingly common. It becomes difficult to buy insurance as you grow older and as you develop some of these chronic issues, but it's not impossible. So a lot depends upon the level of a chronic ailment which you have, the amount of blood pressure, the amount of hypertension, or in somebody suffering from diabetes, the extent of that. The good thing is that over the past few years, many insurers will get into this level of detail where they'll ask for your medication, they'll check the condition, and then they'll sort of issue the insurance to you. What they will almost always do is to exclude some ailments for a certain number of years, and that is called the pre-existing exclusion period. It's a maximum of 4 years, and can be even as low as 2 years. So I think you should definitely go and try that. Very broadly, if you look at the standalone health insurance companies, many of them will have specialized products for you at this stage. I think you should buy it immediately, because most of these general Mediclaim health insurance products can be bought only before the age of 65, and after 65 there's a different category of products called the senior citizen plans that come into play. But I think you're better off, over the next few months buying some of these. And I think I'm from your question, I can't make out what is the extent of the ailment. But if it is routine and normal and not extraordinary, I think you should be able to actually get good insurances. You may have to speak to 1 or 2 companies about that. The other tip I have for you is that if you have your medical records and tests, many insurers today will look at those medical records and give you an opinion beforehand about whether they will issue an insurance to you. So from your perspective, it's much better, because you don't have to necessarily fill up a form and go through all the detailed medical tests to get an answer. You can just show your medical reports and know whether you'll get it or not. I hope that answers your question.
All right. Kapil, since we are talking about specified diseases, I think now is a good time to get in your opinion on critical illnesses policies. What is that about? If you could name a few illnesses that are specified, that are mentioned, to whom this sort of a policy would be suited?
Yes, of course. I think the severity of critical illnesses has just shot up over the past few years. The most expensive to treat is obviously cancer, but you also have a lot of other illnesses, cardiac related issues, stroke, and so on and so forth. The important thing to realize is that when you buy a general Mediclaim plan, that does cover critical illness treatment as well. So I would say that anybody should buy the common Mediclaim general health insurance product first, and then supplement it with a critical illness plan. The number of critical illnesses varies by insurer, but it is increasingly they'll offer between 20 to 30 critical illnesses. What any buyer should do is to look at the list of illnesses, and if there are illnesses there that do not necessarily require hospitalization, those are must buys, because those would not get covered under a normal Mediclaim plan. For example, there are critical illnesses plans that will cover you for stroke. Stroke does not require material hospitalization, or they will cover you for deafness or blindness or Parkinson's. And so my recommendation to buyers is that get your base Mediclaim plan in place first, then buy a critical illness plan, but look at the list of diseases and try and pick a plan that offers the kind of illnesses I spoke about, which may not require hospitalization. I think that is the best combination. And yeah, so that's all the basic critical illnesses like sort of key organ failure or cancer or cardiac issues are all covered in all the plans. And I think they're also a must to have. Today, if you get, as I mentioned earlier, if you get any of these critical illnesses, you're talking of at least 15 lakh of cost to get yourself treated, and medical inflation is about 15%. So if you look forward 10 years later, what is costing 15 lakhs today is going to cost you 40 to 45 lakhs, down the line. So the more you can buy your higher sum assured now, the better it is for the future.
Our phone lines have been ringing off the hook, so very quickly we're going to get in our next caller. It's Vijay Menon from Mumbai. Hi Vijay, good evening. What's your question?
Yes.
Yeah, hello.
Yes, Vijay, go ahead with your question.
My question is for a senior citizen like me now,
I'm sorry, could you repeat that again? Go ahead.
My question is for a senior citizen like me who at 66 years has been rejected by certain insurance companies for having a chronic illness of... my applications have been rejected earlier because of a chronic illness called rheumatoid arthritis. And I have a certificate for my consultant and doctor with whom I check up regularly, who says it is very much under control and there is no reason why insurance company can flatly refuse it. What do you have to say on this? Because there are several people who are in a similar condition that I understand.
Okay, Kapil, go ahead.
Yeah.
So I think the insurance company is well within their rights to decide what they want to insure and not. And unfortunately, they don't necessarily look at what they call risk in a way a conventional doctor would look at it. So don't sort of get too agitated or worried about that. But what I do want to tell you, which is a positive thing, is that there are 1 or 2 insurance companies who will cover senior citizens like yourself, even with rheumatoid arthritis. With a pre-existing exclusion. So, there are 3-4 of these plans, but one of them which I know of is STAR's Senior Citizen Red Carpet, who do cover pre-existing diseases, and a few other insurers also. That's not the only insurance which is available. So you have products out there that will insure you, and just focus on those and don't worry too much about the insurers that rejected you. Just move on. Let that be.
Okay, well, yes, it's the insurance company's prerogative on who they would like to cover and who not. So that is something you would have to grapple with. Of course, move on to other insurance companies as well. I hope we've been able to answer all your questions and queries. Kapil, really appreciate you taking out time and helping our viewers out with their insurance-related questions and queries. Well, with that, we'll have to wrap it up on this edition of the show. Many thanks for watching.